Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be going over our live mortgage rates. Then, we're going to be doing a deep dive into down payment assistance programs. Give us just a moment here to go live on all the different platforms so we can get up and running. We got the chat up on the screen there. Feel free to drop a comment in the chat as you tune in. We definitely appreciate it. Hope everybody is having a great week so far. Definitely a great topic here for today to talk about, and something that obviously a lot of borrowers are interested in. All right. So it looks like we're live on all the platforms. We'll go ahead and get it started here. Go ahead. What we'll do is we'll take the chat off the screen for now, but you can keep dropping comments there in the chat. And you can also drop any questions you have in the chat as we go through our deep dive topic here for today. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on the show is go through our actual live mortgage rates for some different programs. Then we do a deep dive into a different loan type. And today's loan type is going to be down payment assistance program. So, we'll go ahead and do a deep dive into that shortly. But first, let's go ahead and check out the rates. So, Nick, if you're ready, let's pull up today's rates and see what they are looking like.
All right. So rates are looking good here. We will check out the initial rate sheet for today. It is August 28th, just after 11 a.m. Eastern here. So all the initial rate sheets are live for our standard programs. If you'd like a full breakdown, an itemized loan estimate of the APR, all the fees that go into the APR, please get with our team members. We have 300 plus loan officers to help you out. For the demo, as we do every day, we'll set up a standard scenario. We'll do a single family home. We'll do a $500,000 purchase, $400,000 loan amount. That corresponds to 20% down payment, 80% loan to value. And we'll set all the demos here to an estimated 760 credit score and an estimated 40% debt to income ratio. So with those settings, let's check out the rates for today. So first up is our 30-year fixed conventional for a primary home. Typically the most common option people think of when they think of a mortgage. Rates today coming in at 5.875. That's amazing. Final APR 6.195. And if there's any reason our customer doesn't qualify for a standard conventional option, we'll typically want to quote an FHA option, which allows more leniency on credit issues and a higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. Rates today for FHA coming in at 5.125, final APR 6.052. So notice when we compare side by side, our customer that qualifies for both may want to check out FHA if they're willing to do that mortgage insurance. And our customers that need to use it, definitely a very good option. It's very comparable. And VA is only for our eligible vets and active service members. If our customer is eligible, these programs are great. Rates today coming in at 5.25. Final APR with a standard funding fee, 5.530. So notice if our customer qualifies for VA, definitely going to be the best option compared to FHA or conventional. So definitely take advantage. And the final standard government option here, USDA, is only for properties that are in USDA eligible areas. And that is usually the rural areas of the country. So if the property is eligible and the borrower is eligible, this is a great option to consider. Rates today coming in 5.25, final APR with a standard fees here, 5.984. So notice if our customer qualifies for both USDA and FHA, they're going to compare. USDA is a touch cheaper and also a touch cheaper than conventional. So great option for those customers looking in those areas. And that rounds out our standard options here that any bank or lender has. If our customer doesn't qualify, they would unfortunately be denied by most banks or lenders, but we have 5,000 plus other options here, starting with our standard 30-year fixed non-QM alt doc option for a primary home. So if the customer can't qualify with tax returns and needs to use alternative docs, we'll switch to alt docs, rates as low as 6.5%, final APR 6.810. And when we compare that to conventional, we're within usually about a half a point, looks like about 0.6 today. So very reasonable option if our customers need to use it to still get that home they really want. And we can also use alt docs for investment properties and tons of different options for investment properties. So this is again a bank statement or similar coming in today at 6.875 rate, final APR 7.300. And we'll compare that to our other investment property options. So there are no government options, so no USDA, FHA, or VA, but our conventional programs do work for investment properties. Coming in today, 6.75 rate. Final APR 7.095, so lower than our alt doc options, which is great, but not quite lower than our favorite loan type, our DSCR. No income or employment docs needed for these loans. We simply use the estimated rents from the appraisal to determine a DSCR value. The estimated rents can cover the estimated expenses. That's a ratio of 1 or higher, aka the property cash flows monthly, which is preferred. We use a ratio of 1.5 for all these demos. And our option here with a 3-year prepayment penalty is the most common. Rates today, 6.5%. Final APR, 6.836. So beating our conventional option by a touch. And we could add a 5-year prepay to lower the rates a touch. Today it's actually the same rate, just a little lower cost, 6.5. Final APR, 6.772. Hopefully this updates a little later today. And we have our no prepayment penalty option, as some states do not allow it and some investors don't want one. Rates today come in at 6.999, final APR 7.429. So a touch higher than conventional to go with a DSCR with no prepay. So definitely recommend the customers to add one if they want, but still a very good option with much less documentation. And our second mortgage options here. Great options for our borrowers with low rate first mortgages still and need cash out. And HELOCs are definitely a higher rate that we can offer on these. So our 30-year fixed second mortgages for our primary home allow us to get cash out as low as 8.375, final APR 8.8. And we can even do it for investment properties as well, get cash out of those investment properties, rates as low as 9.75, final APR 10.026. And these are non-QM programs, so we can use bank statements and similar. So very cool options with much lower rates than our adjustable HELOCs at the moment. And now let's get into today's topic. So unfortunately, when we do the live rates, we can't go over all our cool programs, and down payment assistance is definitely one of those cool options. So this is where we can help get assistance from some sort of alternative program, second mortgage, all kinds of different options. So Jose will go over the most common options and also explain what the difference is between national and local DPA options, if you could please, Jose.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So first, let me get into what we're talking about when we have down payment assistance, right? We have national plans and we have state plans and more local plans, right? So the one that we're talking about is the national plan, which does not require any type of first-time home buyer status by the borrower, does not have any income limitations. You're only subject to the regular income limitations of the program that you are applying for. So what that means is, you don't have to jump through any additional hoops of fire to be able to qualify for that loan. Right. So very important there when you consider that, because the plans that we offer are the national plans. Right now, the other thing that you have to be aware of when talking about down payment assistance is forgivable versus repayable. The option that is in everybody's minds out there, the ones they're really looking for, is the forgivable option, which usually after a certain number of payments, in the case of the option we're offering, after 60 months payment, as long as the first mortgage is on time after you've paid that first mortgage for 60 months, since there's no payments due on this second lien, which is a forgivable down payment assistance, then that down payment assistance is forgiven. However, the thing to note is that the interest rate on the forgivable option is higher than the interest rate on the repayable option. Right. The repayable option offers the assistance in the form of a second mortgage, which has a 30-year amortization at 9.99% interest rate, but most importantly, has a balloon payment due in 10 years. Now, normally, hopefully the borrower would have refinanced out of that FHA loan before those 10 years are up, consolidate, get rid of the mortgage insurance and all that good stuff that you do when you refinance. But in case they have not, then that loan is due in 10 years and has to be paid. But again, the interest rate is lower on the repairable option. However, the credit score requirement is also a little bit higher. It's a 660 minimum credit score for the repairable option versus a 620. So why would someone go over one option over the other? The reason may be because since the repairable has a lower interest rate, it may allow for easier qualification. Even if there is a nominal payment for that second mortgage, it's usually only going to be a 10, 12, 14, 15, $18,000 loan, which is not going to have a very high payment. The other thing to consider is that there is also a closing cost assistance option for these down payment assistance loans, where the assistance given is only for closing cost assistance, not to be applied to the down payment. That's really important to note, because the down payment assistance options actually satisfies the borrower's minimum, for if it's an FHA loan, minimum 3.5% of the purchase price as their minimum funds contribution to the transaction. That is the main reason then you would use the down payment assistance option, is to satisfy that requirement, in hopes maybe to get closing cost assistance from the seller in the form of seller contribution, and possibly try to then come up with the difference from the borrower, which may not equal 3.5% of the transaction amount, but you've already met the minimum 3.5% from the down payment assistance. The other thing to note is there is a USDA down payment assistance option, which I'm going to share with you also, which offers 3.5% forgivable only. Now that's really a home run, because then that gets applied to the closing cost. So let me go ahead and share the first option with you today. Is the one everyone's looking for, the unicorn, the 3.5% forgivable down payment assistance. And you will note one thing here. Note where the rate starts. 8.75 has a cost of 0.625, right? But note where the sweet spot really is, 7.75 at a cost of 1.125. Looks like it's a very good option for a down payment assistance borrower who's looking to maximize the assistance, right? You don't want too many fees in loan discount. However, you're able to buy it down to 7.125, but at an additional cost. So, but do look at this. Now, when I show you the next option, which is the repayable, now you'll note the repayable at 7.625 actually has a lender credit, which sounds pretty cool, because now you're getting 3.5% down payment assistance plus an extra quarter point here to apply towards the closing costs. However, if it's a interest rate you want, you can buy that down all the way to 6.75 at a cost of 2 points. However, you do see a very interesting option here at 7.125 costing 0.625, which again, I would probably see that as the sweet spot for this rate table. And now our 5% of this purchase price repayable option as well. Like I was mentioning, the repayable is in the form of a second mortgage, minimum 660 credit score, and a payment is due at 9.99%, 30-year amortization with a balloon due in 10. However, here's our rates. Now you notice the other one, 3.5%, had a credit of a quarter point. So here, 7.625 costs you a half a point, but you get 5% of the purchase price as assistance, 3.5% to be applied to the down payment, and the other 1.5% can go to the closing costs, and then maybe get some seller contribution. And the borrower could essentially do a transaction where the only monies they would have to come up with would be for the deposit for the sales contract, their inspections, and the appraisal. So this is a very good deal. 7.625, buying it down all the way to 6.875. Now, I mentioned closing cost assistance, right? So this is where you can apply it only to the closing cost, not to the down payment. That means the borrower still has to come up with 3.5% of the purchase price as their minimum funds contribution to the deal, which will be their down payment. So this, if they needed this much to their closing cost, 7.625 is almost at par, and you can buy that down to 6.75. So remember, 5% of the purchase price to the closing, which would allow them, for example, if they really wanted to buy down the rate to 6.75, that's one way to do it. Come up with the extra money. Now, if you don't need that much, because depending on what your purchase price is, if your purchase price is $450,000, hopefully you won't need more than 4% to cover your closing costs, depending on the cost of your insurance. Look at how much better the pricing gets. Now, 7.5% actually gives you a lender credit. Starts making more sense for the DPA. And look at that, 7.125 is only costing 0.375. So that looks like your money shot. Percent of the purchase price and of the purchase price closing cost assistance, pricing gets even better. You're looking at a lender credit of 1% at 7.625. That's awesome, because you're getting 1% here plus what is this, 3%. So that's a good one. And then you can buy that down all the way to 6.75, and the cost drops substantially. And our last option is USDA. Now, USDA, this is 100%. This is 3.5% forgivable. And this is down payment assistance on that one. That's a typo there. But the rates are for our 3.5% forgivable down payment assistance for USDA. So this is a great way to do that cashless transaction for the USDA borrower, right? Most of you may not be aware that down payment assistance is available for USDA, because USDA doesn't have any down payment requirement, but there are closing costs. So this option is 3.5% down payment assistance to the borrower, forgivable, right? This is the forgivable option. So you're looking at 7.625 costing 1.75 and 7.5 costing 2.25. So those are great rates for your forgivable option down payment assistance. So many good options here at the Mortgage Calculator for down payment and closing cost assistance for your borrowers. There's a lot of action going on right now in the market for purchases as the rates start trending downwards. So we hope to serve you in your lending needs.
All right. It looks like we do have one question here. The question is, the forgivable option is not shared appreciation, correct?
Yes, this is not a shared appreciation loan. This is either a regular FHA or a regular USDA loan that has a down payment assistance option. So it's going to be a little bit different pricing than a standard USDA or a standard FHA. That's the only difference in this product.
All right. Okay. Looks like that's it here for the questions today. Excuse me. Remember that we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a different loan type. So we'll be back tomorrow with a new loan type to talk about. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live.